Scott, you look at the 10-year. It's still a flight to safety that is happening before our eyes at 1.73% for that yield. I still look at that and I think you're better off in stocks if you can handle the risk of a roller coaster ride, because there are many names out there that have no exposure to China. Verizon, for example, gives a very nice dividend and has zero exposure to the problem child that we have right now.
Liz, I absolutely agree with you. Now, everyone's portfolio has varying degrees of risk assets to them and varying degrees of how much they have in a bond portfolio. But you're right, at 1.7%, I'm going to look at the equity markets here, and I don't want to be all in. In fact, I think that the rally we're seeing today is very short-lived. I kind of wish that the flush that we had overnight had happened during an open, active day session, that retail could have gotten involved in that flush, because to me, that would have been a better signal that maybe we hit a short-term bottom here. That being said, I think there's lots of bargains out there to be had. And, I think you need to pick and choose. But I agree with you. The equity space is where I would rather be right now.
Hey, Scott, just a quick follow-up to that. Since that flush out did happen overnight and the retail investor didn't get that opportunity, this might be an opportunity now why we're seeing this market run higher, because the retail investors are going, oh, I hope I didn't miss this whole flush out. I need to get back in. So that might be some of the false misleading green we see on the screen now.
And, John, that's a really good point. And I would say, just based on experience, and I know you've lived through it as well, that's kind of what scares me about this rally today.
Yep, you're absolutely right.
Guys, we've got to run. A great conversation. John, Scott, Phil, thank you. The retailers recovering today. That's certainly welcome, I'm sure, for those stocks. While the markets might be in the green.